What's up everyone, Matthew Winters here and welcome back to my channel. So a few people have reached out to me and asked if I could do a video showing my complete portfolio and what all my holdings are. So today we're going to dive into SimpliSafe Dividends and I'm going to show you what positions I own, how many shares I own, and what my annual payout on each individual stock is. SimpliSafe Dividends is the program I use to track all my dividend investments, get the information I need on how safe a dividend is with any and all companies I'm looking to invest in, and really a bunch of information that is key to the success of monitoring a large dividend portfolio. A side note, I was thinking of doing a complete video tutorial on how to use SimpliSafe Dividends, what the pros and cons are, and what the tool can offer you for your dividend investments. So if that is something that you would enjoy seeing, leave a comment down below and I'll get going on it as soon as possible. Don't forget, if you're new to investing, use my link in the description below to sign up with Robinhood and you and I will get a free stock with a possibility being valued at a couple $100s. Robinhood offers commission-free trades, it's very user-friendly, and it's a great platform to start investing. And if it's your first time here, don't forget to smash that like button as it really does help grow the channel. And if you enjoy the video, make sure to subscribe for future dividend investing content. So here we are at SimpliSafe Dividends. If we take a quick look at the snapshot, we can see that the annual income is sitting at $1,373. We can see that my dividend yield on average is 2.85%. And we can see we have an average dividend growth of about 8.4%. Now, I do want to say that the way I invest, guys, is I walk a fine line between three things. Between a dividend yield, between an average dividend growth of at least 5 years, and then a dividend safety score. So, you know, if you take from one, you're giving to the other and vice versa. So you can have a very, very safe score with a lower dividend yield, but with big growth. And then if you look at my higher dividend paying stocks, like something like Magellan Midstream, where we're getting about 8.97%, but you have a little bit of an unsafe dividend score. So really, I just try to find that fine line to be kind of on an even keel, to have good safety, good yield, and good growth. Now, the other thing I want to mention really quickly here is that you can add a lot of different pieces of information on each stock. How I have it set up here is just kind of what I like to see with my shares, average cost per share, what the current price is at, how big of a piece of portfolio it is, what sector it's in, what my market value is, what my gain and losses are, what the yields are, what its safety score is, what its growth, and what the annual income is. Those are the snapshots of information that I like to see when I come here. Now, if we look at this too, I want to show you that as of right now, standing in the portfolio, I only have one investment out of 65 holdings where I'm actually down something. And that just shows you the power of dollar cost averaging and being disciplined on when to enter a certain position. And you can see that I've got all the way up to 209% on a gain, down to 0.4%, and only one loss there on Walmart, which really isn't that bad. And you got to consider too that the past 2 days in the market we've been down. So yeah, granted, for a straight week we've been riding high, but again, I just wanted to show you that if you stay disciplined and you stay to your rules, and you use a dollar cost averaging to bring the cost per share down, it's the smartest way to invest, especially for long term, regardless of receiving your dividend yield. So I do want to mention also that out of the 65 holdings in this portfolio, most of them are dividend paying stocks, but there are a few stocks in the portfolio, such as Arconic, that do not pay dividends, but it is a company that I believe in. And then I have other companies like Boeing, Southwest, Delta, that have recently cut their dividends, obviously with the economic outlook. I have Target here, which just recently cut their dividends, but they did say that as soon as they can, the dividend will be back. So I'm holding these companies because A, I believe in some of them, regardless of paying a dividend. B, I'm holding them because I know that the dividend will be coming back and that it was a speculative play. But like I said, for the most part, this portfolio really is a dividend-paying portfolio, and the percentage of companies that are not paying dividends is very small in the grand scheme of things. So anyway, let's go ahead and take a peek at what companies I'm holding, how many shares I have, and what the annual payout is. I guess what we'll do is we'll just go with my largest annual payouts and then work our way down. So we can see here I have 20 shares of General Dynamics, paying out an annual income of $88. NextEra Energy, 15 shares, paying out $84. Omnicom Group, 30 shares, paying out $78. Johnson & Johnson, 18 shares, paying out $73. Duke Energy, 18 shares, paying out $68. Pembina Pipeline, 35 shares, paying out $65. at&t, 30 shares, paying out $62. Magellan Midstream, 15 shares, paying out $62. Wells Fargo, 30 shares, paying out $61. Coca-Cola, 35 shares, paying out $57. OGE Energy, 25 shares, paying out $39. The SPHD, 20 shares, paying out $37. Merck, paying 15 shares, paying out $37. ExxonMobil, 10 shares, paying out $35. National Retail Properties, 15 shares, paying out $31. Cohen & Steers Quality Realty Income Fund, 30 shares, paying out $29. Realty Income, 10 shares, paying out $28. Enterprise Products, 15 shares, paying out $27. Intel Corp, 20 shares, paying out $26. Verizon, 10 shares, paying out $25. Pepsi, 6 shares, paying out $25. RGA, 8 shares, paying out $22. CubeSmart, 15 shares, paying out $20. Valero, 5 shares, paying out $20. Raytheon, 10 shares, paying out $19. Bank First Corp, 13 shares, paying out $17. Vanguard High Dividend, 6 shares, paying out $16. Eastman Chemical, 6 shares, paying out $16. Pfizer, 10 shares, paying out $15. Norfolk Southern, 4 shares, paying out $15. AbbVie, 3 shares, paying out $14. Walmart, 6 shares, paying out $13. Caterpillar, 3 shares, paying out $12. Visa, 10 shares, paying out $12. Westrock Company, 15 shares, paying out $12. Honeywell, 3 shares, paying out $11. Chevron, 2 shares, paying out $10. CVS, 5 shares, paying out $10. McDonald's, 2 shares, paying out $10. Digital Realty Trust, 2 shares, paying out $9. Starbucks, 5 shares, paying out $8. JP Morgan, 2 shares, paying out $7. Apple, 2 shares, paying $7. UGI Corporation, 4 shares, paying out $5. Sunoco Products, 3 shares, paying out $5. Nucor, 3 shares, paying out $5. Microsoft, 2 shares, paying out $4. Halliburton, 20 shares, paying out $4. Texas Instruments, 1 share, paying out $4. Accenture, 1 share, paying out $3. eBay, 5 shares, paying out $3. GPC, General Parts Company, 1 share, paying out $3. BHP Group, 1 share, paying out $3. And Activision, 5 shares, paying out $2. And then these companies here, like I said, either don't offer a dividend, or they've recently cut their dividends. So I mean, for the most part, TJ Maxx or Target, offers dividend cut. Southwest cut. Grub does not, Facebook does not, Disney's cut, Delta's cut, Mr. Cooper does not, Carnival cut, Boeing cut, Arconic does not, and AMD does not either. But a very, very small portion of my portfolio compared to the grand scheme of things. And before we leave, I just want to show you the dividend safety score of these companies. So you can see for the most part here, the top companies at a 99 are very, very safe companies to invest in. And you can see the dividend yields are, right around 2%, 3%, which, 3% on something that's very, very safe, with a 22% growth in dividend growth is an excellent company to be investing in, especially in financials. But you can see that I tend to stick towards as high as I possibly can. And as you see, as the safety score goes down, the dividend yields start to grow for the most part. They start to grow. You got 6 and 8 here with a 65. So you can see that there's a few companies here that are borderline safe. Halliburton, unfortunately, is very, very unsafe. If it ever gets downgraded again, it's something that I will be cutting. But, look at my gains on it. I bought it at $4.79, so I got it very cheaply. Wish I kind of bought more just to be a quick flip around and make some profits, but I am holding on to it, for now. But like I said, if the safety score goes any lower, it's the only one I hold here that's very, very unsafe, so it will be something that I will cut loose. But I'm in the profits. I'm up 200% on it, so there's no worries about cutting it and taking a loss, definitely so. Anyway, I hope you enjoyed taking a quick look at my complete dividend portfolio. If you did, don't forget to smash that like button, as it really does help grow the channel. And if you enjoy the video, make sure to subscribe for future dividend investing content. Also, don't forget, if you're new to investing, use my link in the description below to sign up with Robinhood, and you and I will get a free stock with a possibility being valued at a couple $100. Robinhood offers commission-free trades, it's very user-friendly, and it's a great platform to start investing. Anyway, trade safe, take care.